Now that we know how to prepare our day, let's talk about how to spot a divergence setup. Now, once price has moved into your predetermined level of support and resistance, look at the momentum indicator and price to see if you have a potential divergence developing. You can usually see these developing ahead of time before they actually qualify, giving you plenty of time to act. Specifically, you will look for price patterns that are extending to new extremes. However, the momentum indicator is not close to making a new extreme. Mark this off on your chart and wait for a price move to qualify the setup, a trendline break, or a reversal candle, whatever you're deciding to trade, whatever method you want to trade for your entry. All right, so let's take a look at some charts here and see some potential developing divergences. Here on the euro pound, you can see we have price testing a low area. Okay, so we have a level of support here. And I should change this to say support. And we're getting a reaction now, so we'll see if this, we'll just put daily support there. Okay. Now we're going to go down to our hourly chart. So we've identified a level of potential support. And as price was coming into this level, we could see the divergence here developing. Now, you can also see we had divergence on this part of it here. Okay, but price never qualified it. So price was moving lower, MACD was cycling higher, but we never had the price to confirm it. Now we have a double divergence. Okay, we have price moving lower, MACD cycling higher. We can see this potential divergence. It hasn't qualified yet. Now, if you were trading using a candle pattern, you could have entered this right here after this candle pattern formed and targeted the high between both of these divergence points. Otherwise, we want to wait for, and this is a pretty sharp price move that we're getting right now, and we will draw a line across here, and now we're waiting for this to qualify. So we've spotted a potential setup here. Now we're going to wait for it to qualify. And what we need to see now is price to continue this sharp move, break through the high, and then get a correction. We'll draw our fibs and look for our entry for the next leg. So once price breaks the high, we'll draw our Fibonacci retracement. Wait for this corrective pullback swing. That's where we're going to look to enter into the market. Stop loss below the low. All right, so let me just mark off where our stop loss will go here so we get used to seeing this. Okay, so our stop loss will be below the low, and these will be our targets. 127, 162. Okay, let's go ahead and have a look at another pair here. Let's see if I can find something else. Okay, well, this isn't a current setting up example, but since I just saw this, I'll go ahead and show it. You see how we have price coming into a level of resistance here as we were testing this previous consolidation level. Okay, so right here, and let's go ahead and drill down to the hourly chart and see what happened right at this level. Right at this level, you can see we had this little bit of a diagonal type of a movement here, and we had price moving higher, MACD swinging lower here. Oops. And we had a strong price move, really sharp price move here, which qualified the setup. You can see we were traced here to the right near the 62%. Right, we came through the 50, didn't quite reach the 62, then we declined to the downside. At this point, being in this trade, we would have went ahead. Well, okay, the stop loss, first of all, would have been here. Now the test of this low, we would have brought the stop down just above this swing point. Okay, so we'd have very little risk left in the trade. And the target obviously is still the 127% Fibonacci retracement in this case. So just another divergence that whenever I see these, I like to go ahead and point those out. Okay, but you can see how when price came into the resistance level, you could see this developing. You can see how price was moving higher, and look at the momentum indicator here. You can see it was not keeping up. So you have some time to see this, and actually waiting for this price move to qualify it, this gives you more time to act. Now, obviously, sometimes price isn't going to pull back to your entry, so you can miss some trades instead of using the more aggressive entry methods that we use with the candles or the trend line breaks. But using the setup, waiting for the initial price move and the pullback also gives you a lot of time to prepare and react to the market. So you really have a lot of time to set up your trade. Okay, here's a current pound yen. And you can see here, and I'm actually in a pound dollar trade right now. But here, this is the pound yen, and you can see we came up to test level of resistance here, testing a level of resistance, and we're seeing a bit of a reaction here on the daily chart. But let's go ahead and drill down. And at this level, what do we see happening? Now, on the 4-hour chart, we're not seeing divergence between these swings, but we are getting a small divergence here. So let's drill down to the hourly chart and see what this looks like. All right, so here we can see on the hourly chart, look at the divergence all the way up here. All right, this is what we call a diagonal. Okay, we talked about these before, these diagonal type moves. And it's an ending pattern, and it's very typical, as we talked about before, to see divergence all the way through this. Okay, but more specifically here, we had this price moving higher, okay, MACD cycling lower, and now we've actually qualified. We've qualified this. Now, what's good about this, and you can see this very bearish candle here as well. So we had a very bearish candle pattern. This could have been used for entry with a target all the way down at this low. Okay, or we could use this, wait for this cycle to end, draw our fibs, and wait for the pullback, and that gives us more time to react to this particular setup. So once the initial price move here, once this initial cycle stops, we can draw our fib, wait for the corrective setback. So let's just say price does this, and we wait for that corrective setback, then we would enter with our limit order. Gives us plenty of time, and then we could target in that kind of situation, depending on how far this first swing comes, we could more than likely target the 162%, or you can even use this setup to target the low, to target that low area. Okay, so this would be an example of using the smaller degree pattern to enter into the larger degree pattern. Okay, but again, this is how you spot these trades. We identified a level of resistance here. We saw the divergence with price continuing to cycle higher, our momentum waning with the divergence indicator not cycling lower, okay, not cycling higher, cycling lower, and then we see the stronger price reaction. Okay, then we wait for the qualification and the pullback, or if you use the candle pattern entry, or potentially even the trend line break entry, depending on whichever strategy you want to use for that. As long as everything qualifies, you have a good reward to risk ratio. And obviously in this scenario with this very bearish candle pattern, and entering just below 3 or 5 pips below that candle would have given you a very good reward to risk here with the stop above this high and targeting the low area of this the beginning of our diagonal here. Okay, but that's what you'll do every day to spot divergent setups.